Hey guys, it's Sean coming at you with the last market update of August 2021. Hope you guys have had an amazing summer. I just got off a nice vacation in the Cape for a week and it was amazing. Got to enjoy some really great downtime with my family, my wife, my kids, and friends. So it was awesome. I hope you guys are all doing the same. Hope everybody's had a great summer, happy, healthy, relaxed, and getting ramped up for the start of school. Labor Day kind of signals fall turning back on, football season, all sorts of good things. So with that, for us, what it means as a team, the core charity and thing we focused on our end from a community give back standpoint has been the St. Jude Walk Run. It's right around the corner at the end of September, so we'd love for as many people to participate. It's a wonderful cause that impacts the lives of families and specifically children who are unfortunately sick with cancer. And St. Jude is doing everything they can around the world to help kids recover from cancer and help get us closer to a cure. So this is our 5th year participating, and we're hoping to raise over $50,000 to the hospital. We've done that in the past. If you're interested in making a donation or joining our team, I will post a link to this video that includes all the info. So sometimes people ask, well, why St. Jude? Well, treatments invented at St. Jude have helped push the overall survival rate of childhood cancer from less than 20% when they first opened to 80% today. That's amazing. St. Jude freely shares the discoveries it makes, and every child saved at St. Jude means doctors worldwide can use the knowledge to save thousands more children. So they share everything, very transparent with what they're doing, and hoping help and cure this horrible disease. And then lastly, families never ever ever receive a bill for St. Jude for anything, for travel, for stay, for treatment, because they want all the families. All they want to do is focus on recovery and treatment and a cure for the children involved in their lives. So we'd love for you to participate. It's super important to me. It's super important to our team. We've had a lot of success with it. We've had a lot of fun with it. So if you want to come out and walk, run, or do it virtually and donate and help, we'd love for you to participate. Just let us know. Like I said, we're going to post some information at the bottom. All right, let's talk mortgages and housing. So we got a lot of good stuff to cover with you guys. Mortgage purchase applications decreased by 1% last week, so virtually the same, and are still 19% lower on a year-to-year basis. Now, keep in mind, it sounds like it's maybe not as busy as last year. It's very busy, but last year there was no spring market. The market shut down in April and May and kind of opened back up with a surge in June, July, and August. So last June and July and August were much busier than normal. This year was hectic as well, but it's not quite as crazy from an application standpoint, although to me, it's just as busy as it was last year in terms of activity. There was a little bit of a lull in my mind in August. It was the first, a lot of people weren't able to go on vacation last year due to travel restrictions and us being in the height of COVID and just being a different world. A lot of people were on vacation this year, were able to travel, get outside. And then on top of that, there was a little bit of buyer burnout just because the spring and the beginning of the summer was so intense that some people kind of took themselves out of the game. So in my mind, that's why application data dipped a little bit, or purchase applications dipped a little bit. So that's something important to keep in mind. I think personally, the fall is going to be bananas. I think it's going to be not maybe as crazy as the spring, but I think with the inventory increasing, that's going to definitely impact some things. The other reason, in my opinion, that purchase application data might be down is that there's more cash buyers out there. So this has definitely been impacted by the rise of the cash buyer who are not accounted for in the mortgage applications numbers because they're not getting a mortgage, right? So cash buyers last year made up 16% of purchases in 2020. This year, it's up to 23%. So when factoring this in, applications to purchase would be lower on a year-over-year basis by only 9% because there's just more cash buyers out there. So they're out there, they're buyers, they're just not getting mortgaged. What we've also seen, what I've noticed is because the market's been in so intense, such low inventory, you've seen a lot of people paying cash and then get their mortgage out afterwards. So we've done a lot of delayed financing, which is a product that we offer and that we're really good at, which means you could essentially just get your purchase mortgage after you buy the house, after having paid cash. But it is important, if that is your plan, to talk to a mortgage professional before you make the purchase, just so you know you're not setting yourself up to fail when you want to pull the money back out so you don't run into any roadblocks. And refinance applications fell by 5% and are now down 8% from last year. Rates are amazing. We are in another refinance boom in 2021. The reason that it's down a little bit is so many people refinanced last year. So many people refinanced at the beginning of this year. So it's not that rates aren't as great as they were. Just the more and more people refinance, the less and less demand there is for it. But there's still a big surge in demand. What we're seeing on the refinance side is amazing. I'm still refinancing people from 2020 that already refinanced once, even some people from the beginning of 2021, because rates are really that great. Also, home values up, so we're starting to see a lot of people want to do home improvements, home renovation projects. So they're doing some cash out refinance to take advantage of equity in their homes that's been created, while also borrowing the money super cheap. But we're seeing some debt consolidation stuff. A lot of clients are shortening their terms and maybe paying off their loans in 15 years or 10 years. So overall, many different reasons to refinance. If you've refinanced already, doesn't mean that there's still not options out there. It's worth 2 to 3 minutes of your life to have a quick consultation. We do annual reviews for all our previous clients, but even if you're not a previous client, we'd love to talk to you. We've had a ton of success, and I think you'll be blown away by how much benefit there is on a refinance right now. Some other important data, overall economy stuff. So earlier this month, the jobs report came out. The numbers were amazing. 943,000 jobs were added to our economy in the month of July. That's 70,000 more than was expected. They also revised the May and June numbers, and they increased the jobs added by over 120,000 combining May and June. So overall, more people are going back to work as things open back up and have opened back up. Economy's good, housing market's good, unemployment numbers are going down. The unemployment rate fell, obviously, with all these jobs being added. So in turn, stock markets are doing better than ever. The Dow still hovering over 35,000, which is at its all-time highs, okay? And the NASDAQ is at its all-time high, over 15,000. So the U.S. housing market's doing great, the U.S. stock market's doing great, and the U.S. unemployment numbers are doing great. So in turn, I think you'll see another really, really strong housing market in the fall of 2021 and into 2022. So what we're seeing is existing home sales, which measure closings on existing homes, were up 2% in the month of July. Sales are up 1.5% year over year. Again, last summer was very, very strong because there was no spring market. So when comparison, you're like, oh, it's only up 1%. Well, it was an exceptional summer last year. So those numbers are holding steady in strong levels. Inventory, like I said, is starting to increase slowly. There were 1.3 million homes for sale at the end of July, which is up 7% from June, but still down 12% from last year. I do think we're going to see more inventory in the fall. I think sellers are starting to realize how much homes are selling for. And I think some buyers have pulled themselves out of the market a little bit. So I think it might be a great time to buy in the fall. I think you might not be as intense as the spring was. And I think there'll be more houses in the market, maybe less competition out there as well, because some people have already gotten into their homes, or other people have taken themselves out of the market and continue to rent for a little while longer. Median home price was reported at $359,000, which is up 18% year over year, but still cooler than the 24% year over year in June. So again, home prices are up clearly across the country in every segment. Primary residences, second home markets are up, investment properties are up, and almost in all markets across the country. First-time home buyers have accounted for 30% of the sales. This is still the biggest segment of buyers out there, and the difference is, the biggest barrier to entry before for a first-time home buyer was, maybe not a lot of savings and maybe some debt. Well, because a lot of first-time home buyers, moved home last year and the economy was kind of closed, those first-time home buyers were able to accumulate some cash, pay off debts, pay off student loans, pay off revolving credit cards, and then come to the table. Maybe instead of having 3% or 5%, now they have 10 or 20%, making them much more stronger buyers, much more confident buyers, and obviously being in the game. The other part of it too is that income wasn't a big restriction. We have a lot of clients, even first-time home buyers in this great economy, making really good money, but their barrier was they didn't have savings because they were paying expensive rent, they were paying student loans, stuff like that. Well, moving home for a year allowed them to debt consolidate, save up cash. Now they're not your typical first-time home buyer anymore. So that's a force to be reckoned with, that crew. And then the other part of it is investors purchased 15% of the homes, up from 14% the previous month. Investors are making a little bit more competitive for first-time home buyers. Now, here's why. They're likely purchasing the lower-priced homes, realizing the rents are up. Now, why are rents up, you might be asking? Well, rents are up due to low inventory. It's harder to buy a home, so more people are starting to rent. We've been getting information and communication from all our landlords that rent prices after having issues in 2020 are stronger than ever in 2021 and are continuing to rise. We're definitely seeing stuff get grabbed up right away. companies are starting to open up. People are starting to go back. Um, Obviously, some of this can change with this whole Delta variant, but right now we're starting to see people move back into urban markets, suburban markets, and rents are definitely strong. So investors, we're starting to see gobble up properties because they can get a good return on their investment with home prices going up, and obviously these properties cash flowing too. Here's some information we got from my man Jeremy Collette, our head of capital markets here at Guaranteed Rate. So coming up this Friday is the Fed Summit at Jackson Hole. So historically, Fed chairs use this event to announce major shifts in policy. We don't think there's going to be any major shifts. I think given Jay Powell's history, I don't think we'll see a substantial change in direction on Friday, per Jeremy, though several Fed officials have suggested it's time to begin tapering asset purchases. Now, we've heard a little bit of that. To recap, just so you guys know, to support the pandemic-stricken economy, the Fed had been purchasing $120 billion a month in mortgage-backed securities and treasuries. That's what's been keeping rates low. That's why rates were in the twos, high twos on 30 years and jumbos, low twos on 15-year mortgages. Adjustable rate mortgages have never been lower. So that's why mortgage rates are so low, is because of the Fed activity and the Fed purchases. Okay. The challenge for the Fed is, like, how do they unwind that? It's so massive, double or triple what it was when the housing crisis occurred. Is like, if they start signaling tapering, it throws the markets off. So they got to figure out how to kind of unwind this policy they're in right now, which I personally believe rates are going to be super, super low towards the end of this year and into next year. Maybe not as quite as low as we've had, but even rates in the low to mid threes are still amazing and will keep this housing market really, really hot and humming right along. We believe Jerome Powell will remain true to form and not step in front of the next Fed meeting in mid-September, also giving the Fed the opportunity to monitor the spread of the new Delta variant and its effects on the economy a bit more. Obviously this is a new thing. I've never had a global pandemic in my career. I'm sure nobody planned for it this year. So how they kind of get through this is to be seen. I think the Fed's done a really amazing job so far in helping us navigate this and keeping our economy humming along. Like I said, unemployment's going down. Housing market is probably the best sector in the entire world, the U.S. housing market. Nothing's performed better. Dow is up, highest levels of all time. NASDAQ's up. In general, they've done a really amazing thing considering, what we just went through. So you might be debating, we're starting to hear, as the housing market gets hotter and hotter and hotter, is this the time to buy? Is there a bubble coming? I've been pretty confident there's no housing bubble coming. Now, here's why. So obviously home prices have appreciated year over year over year. That's largely due to a couple things. Income's going up, but most importantly, inventory is way down and it keeps going lower and lower and lower every year. It's purely supply and demand. There's no housing bubble coming unless inventory all of a sudden skyrockets, which it's almost impossible for that to happen. There's not this glut of inventory that's going to hit the market. So that's number one. So other things, why this is not like 2008, right? This is when housing crashed. Mortgage guidelines are stricter than ever. Although things are improving and it's getting easier with some of the QM stuff disappearing, it's still, you have to have good credit. You have to have good income. You have to have the down payment. Compliance is stricter than ever. We check under the hood on everything, dot every I, cross every T. So somebody getting a mortgage is truly qualified to be able to get into that home. Inventory is low. As I said, it's lower. It's lower and lower and lower every single year in every market, right? Millennials are aging into their prime home buying years. What makes a millennial into prime home buying years? One, they make more money. Two, they get married. Three, they have kids, and that's the age group they're in right now. That's what drives home ownership, and that's what we're seeing. That's a huge segment of the home buying population. And like I said earlier, they've got cash now and they've got less debt. I personally believe interest rates, like I said, are going to remain low. So, low interest rate environment is the gasoline that will keep all those different factors going, and housing is going to remain very strong. I think there's going to be big demand, and I think there's going to be low inventory for a few years. So I think, bottom line is, even if interest rates tick up a little bit, which at some point they will if the Fed stops tapering, and home prices continue to go up because there's big demand and low inventory, if you wait a year or two and home prices appreciate 5 or 10% a year and interest rates go up a half point, you're going to pay significantly more money in a year or 2 years or 3 years rather than getting into the market now where you're going to pay principal, which means you're paying down your mortgage, pay interest, which means you get a tax deduction, and then have the home appreciate as well. So you're winning if you get into the home market now. You're still winning in a couple of years because I think I'm a believer in the U.S. housing economy. U.S. housing and being in the market. But I think, time shows us that getting in earlier is better than waiting, right? So, I think that the fall is going to be an amazing time, as inventory pops up. And I think, again, like I said, there might be a little bit less competition in the fall. Generally speaking, in my career, I've noticed that my clients that buy in the fall and the winter tend to get better deals and tend to get a little bit of a discount on homes versus clients that wait and buy in the spring. Okay. So bottom line, what you should be doing, it's the end of summer. You're going to see it's going to change dramatically after Labor Day into the housing market. Like I said, there's a little bit of that August lull that happens. Everybody gets their last vacations in. Back to school prep happens. People are moving into their new houses that they've closed on in the summertime. And that all changes after Labor Day. So if you're a buyer, you need to be prepared. So you need to get your pre-approval done. It's never a good idea to wait. Get your pre-approval done. Get to know your team, right? So it's very important to know your numbers. You should know what your max price is. You should know what your down payment's going to be, what your comfort zone is, what your monthly payments are going to be, what you should be budgeting for closing costs. Where are you getting those from? Maximizing your credit. What that does is it breeds confidence and empowerment. I can't tell you how many times I talk to clients that want to buy 2 or 3 years from now. We get them pre-approved and they buy in 2 or 3 weeks, because by knowing their numbers, it eliminates a lot of stress and anxiety. Okay. You need to know your team. You need to know, your loan officer. This market moves fast. You need to know when they're available, how to get access to them 24/7. Saturdays, Sundays, nights, weekends. It's important to be able to turn numbers around, get information you need, talk strategy, connect them with your real estate agent, know your attorneys or your title companies, know the team that you're going to work with, and making sure that you have access and availability to them when you need them and when it counts. Okay. You need to be able to, work with speed. This market speed is super important. So everything's closing faster than it did last year. Houses are coming off the market faster. Loans on average are closing a week or two sooner. We're closing loans faster than ever before. We've never been better in terms of our speed, our systems, and our process, and that is helping our clients win. You got to utilize our pre-commitment process. It's made a massive difference. So there's a pre-approval, there's a pre-commitment, and what that does, is that just eliminates, in my mind, what it does, it creates certainty and confidence in the sellers. It grabs the seller's attention. It makes you feel and look like a cash buyer because all your underwriting is done. And, it shows that you're organized and prepared and serious. Our pre-commitment process has been a big win. And then, bottom line, one last thing is you have to work with an amazing real estate agent. This market's one of the toughest markets out there for buyers. It's tough for sellers too. There's some really amazing real estate agents. They've been a huge different maker. So if you need a great agent in the markets that you're working in, let us know. We work with the best around, not only in Massachusetts, but all around the country. As you guys know, we're doing business in all 50 states. We're kicking butt in all 50 states, both on refinances and purchases, but we've made a lot of really great connections in terms of service providers. So no matter where you're looking, we'd love to help you guys out. So that's what I got for the end of August. A little bit longer than I expected. Hope it was of value to you guys. If there's any topics you guys ever want us to cover, hit us up, direct message me, email me at shant@rate.com. And then please, let us know if you want to participate in St. Jude. It really means a lot to me and my team. And obviously it means even more to the families and the children and St. Jude itself. So let's get involved and let's raise a lot of money. Thanks, guys. Have a great day.